Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka.
And I'm YatiN Mota.
Well, YatiN, today was all about global cues. Of course, we are seeing sharp cuts coming in across the global markets, be it Asia, be it European markets, and US futures also trending lower. Of course, it's in response to the downgrade that has come in for the US from Fitch. Of course, downgrade is something that was being expected back in May when, there was a stalemate over the US debt ceiling. But that was passé. And then suddenly there is a, downgrade coming in from Fitch that perhaps took investors by surprise. And we've seen a knee-jerk reaction coming in across global markets. Our markets, of course, in tandem have slipped somewhere around 1% or thereabouts. I wouldn't call it a big sell-off. Of course, 200-point cut on the Nifty, 700-point cut on the Sensex. Of course, some, in fact, analysts believe that, this was one, reason to take profits for Indian investors, because this is the kind of correction that, the market was actually waiting for. So that has happened. So look at the Nifty that has, just about managed to end above that 19,500 mark. Sensex, of course, below that 66,000 mark, but around 65,750 there or thereabouts, the Sensex has shut shop. If you look at the broader end of the markets, the cushion wasn't really coming in from there as well, like we've seen over the last few sessions. So both the Nifty mid and small caps have, seen cuts of somewhere around 1.5% or thereabouts. All of the sectors were in the red, of course, led by the Nifty PSU Banking Index, the metal pack, auto pack, all the, sectoral indices were in the red. If you look at some of the, individual movers on the index, Hero Motorcorp, Tata Steel, Tata Motors, Bajaj Finserv, NTPC, iShares, all of these counters in the red. Gainers are few and far between today. So Divi's Lab, some of the FMCG names like Nestle, HUL, Asian Paints, Tech Mahindra, Ultratech Cement are some of the gainers in today's session. Of course, as I was mentioning, YatiN, broader markets 1.5% kind of cuts, but lots of movers there today.
Yeah, movers are there, and today clearly it was bashing going as far as the mid-cap indices are concerned, because stocks have moved quite fast, and probably that also lead to some bit of correction, which is on the steeper side. 1.5% down for the mid-cap and small-cap indices. However, if you look at the gainers, we had the stocks like GM Finance, a very large block trade there. Post with the stock is moved up 6%. KEI stock was down 5% yesterday, managed to recover almost all of the losses. That stock was up 4.5%. BEML new 52-week high. Stock has been trading well above the 2,000 rupees mark. Today up another 4%. 5-Star Finance and Thermax, on the back of good results, that stocks are reacting. PVR Inox also, stock has seen some good traction in trade today despite weak market conditions. On the flip side, Redington, weak numbers and the stock is down 10%. NHPC, Piramal Enterprises, Engineers India, Wellspun India, all of these stocks are witnessing some bit of profit taking. In fact, today we had the likes of Engineers India, Wellspun India, correct by nearly 5% each. So profit taking is there in most of these names, but yes, stock specific action continues on Dalal Street.
Well, stock specific action continues. Of course, today I think it's more on the downside, so to say. But let's talk about the stocks that are on our radar. Of course, YatiN was mentioning PVR Inox, and that's one stock that's on my radar, given the fact that the stock has gained somewhere around 2% in a weak market. Yesterday it reported its numbers. There was a loss of 82 crore rupees, but it was lesser than what the street was expecting. And the revenues have come in, higher by about 32% on a YOY basis. So today the management was on CNBC TV 18. In fact, pretty good commentary coming in from the management. They expect revenue to be around 7,000 crore rupees for FY24. In fact, the management has said the India's box office collections for the month of July itself has been 1,000 crore rupees. So, the kind of movies that are releasing on the, in the theatres, be it Hollywood, be it Bollywood, we have had Rocky or Rani Ki Prem Kahani that has seen a good response from the audience, and people are turning out to watch movies in the theatre now. So that is something that's boding well for this multiplex stock. If you look at the brokerage views coming in on the stock post the earnings, HSBC has a buy rating, and most of the analysts that I speak to, YatiN, have a target price above 2,000 rupees on the stock. So, HSBC ITC I was mentioning, it has a buy rating, target price of 1920. It believes that sequential rebound that the PVR has seen bodes well for the rest of FY24. In fact, recovery in Hindi cinema is still very patchy, but it's the Hollywood end of the releases that are boding well for the multiplex giant, right? And it believes that the merger synergies will be some of the key catalysts to watch out for going forward. Even CLSA has a buy rating with the target price of 2015 rupees or thereabouts. Nuvama has a buy rating, and it sees a 24% upside on the stock over the next 12 months. Remember, PVR has been also expanding. It has been launching new screens. In Bangalore, it had launched a 12-screen theatre very recently. In fact, even in Odisha, it has launched a new 5-screen multiplex in Rourkela. So it is expanding, and the management is also saying that they expect good growth in ticket prices going forward. So all in all, things boding well for PVR. If you look at the stock over the last 6 months, it's gained 1%. Foreign investors may have sold into the counter, but domestic mutual funds are buyers. And in fact, if you look at some of the key monitorables going forward, it will be the volatility in Bollywood movies. If that stabilizes, I think things will be working very well for PVR. Aside of that, advertising revenues and traction of movies that are releasing in OTT platforms, that is something that PVR will have to watch out for closely going forward. But as of now, given the kind of releases we've seen, Oppenheimer, Barbie, some Hindi movies also, things boding well for PVR.
Absolutely, and that is one stock which was holding up in a rather weak market today. But what was not holding up in today's market was Chola Finance, and this stock has seen some bit of selling pressure after the quarterly earnings. Now CLSA has downgraded the stock to outperform from buy rating with a target of 1250. Now CLSA believes that the valuations at this point in time for Chola Finance have been rich. In fact, the growth has been strong for the quarter, but net interest margins have compressed, like most of the NBFC segment stocks. In fact, the company has also announced the QIP for 4,000 crore rupees, and this capital probably will be used for augmenting growth as well as the capital adequacy ratio. So on the growth trajectory, yes, Chola has a lot of opportunities, but the net interest margins for most of these NBFC players are under pressure. Results were also slightly muted versus street expectations, and probably that is the reason why the stock ended almost at the day's low. So Chola Finance, that is one stock in focus after CLSA has downgraded the stock.
All right, CLSA has downgraded, but I think the mood around these NBFCs is pretty upbeat, given the fact that they are a play on India's growth story. That's what analysts say. I'm not saying that. But let's talk about the other stock on my radar today, YatiN. It's simply because the company will be reporting its numbers today, and when you look at the stock price, of course, it's down somewhere around 1% ahead of the numbers. When it came out with its first quarter update, it had said that it has seen double-digit growth across segments. In fact, jewelry business has clocked a growth of somewhere around 21% on a YOY basis, and standalone revenue growth somewhere around 20% or thereabouts. Look at the expectations. Margins are likely to lose some shine in this quarter. Profit, if you look at that, may grow somewhere around 22% or thereabouts on a YOY basis. This is according to analyst estimates. Kotak Institutional expects jewelry sales to see some bit of improvement. That is, of course, even evident in the kind of Q1 update that the company has given. Commentary to watch out for, of course, demand, margin trajectory going forward, and any new launches or something that is planned in the coming quarters in the current fiscal. If you look at the stock, that's up 28% in the last 1 year, and return ratios have been pretty healthy in excess of 25%. YatiN, so purely it is a play on, I have chosen this stock for, to take you through expectations or as to what one should be looking out for from the first quarter earnings. We'll see how that pans out and how the stock reacts tomorrow morning. So this is another stock that's on my radar. But
the stock almost ended at the day's low, almost 1% down for the stock of YatiN. But what's also under pressure is the stock of UPL. Now, UPL typically has been, hounded by the fact that China as well as Europe have been correcting their inventories when it comes to the crop protection, seeds and agrochemicals business. Because of this, a lot of Indian chemical companies as well as pesticides and crop protection companies have been facing headwinds as far as margins are concerned. UPL, Morgan Stanley has a overweight, but they've cut the target to 762 rupees. Now, UPL had a disappointing first quarter according to Morgan Stanley. However, this is in line with what the global peers have been reporting. If you look at Bayer Crop a few days back, they had downgraded their guidance, they had cut the outlook for earnings. However, Morgan Stanley believes that UPL is still trading at discounted valuations to historic levels, and also from second half you could expect some recovery in volumes as well as pricing for these agrochemical companies once the inventory correction globally does happen. Because of the China reopening, we saw some dumping and inventory corrections globally, because of which there have been some margin pressures for all of these agrochemical stroke chemical specialty chemicals companies. But Morgan Stanley does believe that valuation at this point in time provides some comfort. Stock is at a 52-week low, but let's see if second half they are able to cope up with the current market conditions, which are clearly providing dull visibility to earnings.
That's right. Consistent 52-week lows coming in for UPL. That's one stock that has been under pressure. But with that, I think we are done with this edition of Closing Bell. I want to say that, of course, we'll be watching out for earnings from two important counters today, YatiN, and secondly, Indigo. It is expected to hand in record profit growth. So, in the morning tomorrow, of course, when I'll be back with Morning Trade, I'll be discussing these two earnings. So, don't forget to tune in. But for now, I think it's a goodbye from me and YatiN. If you have any comments, leave them in the comment section below. And for all your other news and updates, stay tuned to Moneycontrol. Thanks a lot for watching. It's a goodbye from me and YatiN.